world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Today, we're lucky to be joined by Andra Sonea. Andra is a banking systems specialist. Until recently, lead solutions architect within the Innovation and Digital Development Directorate at Lloyds Banking Group in London. Andra is currently pursuing a prestigious Anthemis Fellowship to build on her work in banking system architecture. Andra has been involved in Fintech for many years and is a keen supporter of collaboration between financial services institutions and startups. Prior to joining Lloyds in 2014, she worked for over 15 years as an international technology consultant with IBM, SAP, Ernst & Young, and KPMG, gaining firsthand experience building and transforming IT architecture at some of the world's largest banks. I look forward to an insightful conversation around core banking and some of the key problems currently faced by incumbent banks dealing with legacy systems issues. As always, check us out on iTunes, SoundCloud, Stitcher. Get in touch on Twitter at Rebank Podcast or connect with me directly at Will_Beeson. Enjoy the show today. Andra, welcome to Rebank.
Thank you.
You've done some interesting things over the course of your career. How did you end up in your last role at Lloyds?
It was a natural change, I think. I worked for almost 20 years in technology consulting, and I wanted to go on the other side, on the client side, with the hope that I will be more effective in creating the change that I see so necessary in financial services.
Mm-hmm. As you started, was it with IBM? How did you get into kind of this area of banking?
I actually started consulting with SAP, but IBM was extremely important for my career. In all my projects for the past 10 years, I went to either a retail bank or insurance company or investment bank. And I either had to implement a system, which is still in use somewhere in the back office, or to solve or find root causes for certain problems that were manifesting themselves somewhere in the business, or advise on roadmaps going forward a number of years.
Tell us a bit about the work that you're currently doing.
That's unusual even for me, but I enjoy it very much. I have joined the fellowship of Anthemis.
What does that mean for those who aren't familiar with it?
I'm not sure how big was the pool they looked at, and for sure it included startup founders and thought leaders and experienced people with ideas. I'm lucky to find myself in the company of 4 others amazing individuals with very different experiences. So the fellowship is now in the 3rd year. This time we are 5. In the previous year there were 3 people. This time it has for the first time a different structure. So each of us has an idea he's passionate about. We are in different stages with our ideas. Some are more advanced and they worked before on it, and it's polished and in a stage where it's close to execution. Others are exploring a very large domain they are interested in with the intention to define something that they would like to work on. Anthemis offers us a great holding place, I would say. It's their ecosystem, including some of the best minds in the industry. So I'm very grateful to have this chance.
So they effectively sponsor you with a grant to pursue your work for a period of time?
They're not sponsoring us financially. What we all get, all of us had these ideas before, but it's like you wait for somebody to give you permission to stop and finally work on what is meaningful for you.
And is there support in terms of expertise from within the Anthemis network?
Yes.
Are you engaging with their portfolio companies at all?
Yes, that's all on offer. We are based in the Anthemis offices and we have met everybody there. They were all very open to discuss with us, to understand what we want to work on, offering advice, telling us how they could help, and really being open. Okay, when you need me, I'm here. I'm, however, now in a very early phase where I'm spending a lot of time reading, refining, and polishing really the problem. I feel that this is required. This is a necessary step before approaching a problem, which I believe requires a lot of respect.
So tell us about the problem.
Some people know me in the industry for this idea because I get very passionate about it. So as you know, in the fintech world, for quite a number of years, we've seen a number of companies coming with various propositions. And in my view, they stayed very much at the surface of financial services. And that's fine, because this is the visible part of banking. This is what people feel the need to address. Banking shouldn't look like that. Their services shouldn't be like that. Their advice shouldn't be like that. Okay, fine. But there is little curiosity, I would say, for what is underneath. In my case, I have been close to these systems, and I understand where things get blocked. With the best intentions, any of the banks we have now on the market would have a big difficulty to absorb new financial services propositions from startups. So the area I'm focusing on is what is called usually core banking. But I'm not looking only at the core banking as a software to, let's replace this core banking with another nicer core banking. But I'm looking at a number of layers from architectural point of view. Layers going down, not up towards mobile. There are many who try to do this. I'm looking core banking and down 3 levels.
So if the fundamentals of the core banking system are effectively a general ledger holding account balances and debits and credits, what is it specifically when you think about the way things are done now versus the way that conceptually things could look different?
Core banking systems are a bit above the general ledger. They are the transactional system. They are the systems of record, and they are the source for what it means doing banking, taking decisions at bank level based on those numbers. The most important object in core banking system is the product. For historical reasons, core banking systems developed by product, and we have in any bank 20, 30 core banking systems which are by product and by bank. Various generations and technical standards, they are between 20 and 40 years old in UK, in any bank. The problems this creates is not, it's an old system. It's not about hardware, it doesn't sit on 40 years old hardware. Luckily for all of us, they are on a very stable infrastructure. However, the software you have there reflects the limitation which existed in technology, software and hardware 40 years ago or 30 years ago. When we counted the bits, so if somebody remembers Y2K, at some point somebody gave up 2 digits from the date just to save that space. It's inconceivable nowadays. Nobody thinks this way. But if you think about this in core banking terms and think about the trade-offs that were made in order to enable some such systems to function, you start to realize what type of data you have there and how limited it is compared to what is required nowadays to do a digital business. This is how it looks like, how it could look like. So I don't see any reasons why the systems need to be separated by products. If we speak about retail banking, all the financial products have relatively simple ways of functioning which can be captured mathematically relatively easily. One of the biggest limitations existing in banking nowadays is that it takes months to create a new product. And I don't mean something radically new, just a new product. It takes month and it costs a horrendous amount of money. If you would imagine a fintech proposition, which is amazing, attracting a new niche of customers, fabulous UX, customer experience, everything, and they come to you and they say, look, we have this. You would kill that particular startup if you pass the costs of creating that product into your internal banking. You just cannot do this. So as a consequence, this model where the banks somehow are supposed to be open and accommodate whatever comes towards them, for the moment it cannot function financially. I don't see it happening. There are costs which cannot be passed to those who would need to use this type of services. The product problem needs to be solved in core banking in order to be able to be open and ready to accept and process different financial propositions which come from the fintech world. That's one thing. Then there are problems which are, let's say, simpler from technology point of view because they have been solved somewhere else in the industry. It's a problem of scale. So being able to hold a large amount of data, you would be surprised, but current core banking systems don't hold a lot of data. And also the ability to hold rich transactions. Yeah. So nowadays, when you have a payment or you have various forms of financial transactions, you can capture so much information about what is going on. For sure, you cannot capture this nowadays in core banking systems. You have various ways of creating stuff around the core banking systems in order to hold these and reaggregate them somewhere and making it look like we've solved it. There is a diversity of ways in which the transactions could look like, and you have to be able to accommodate also this. But these are technical challenges which have been solved already in the current technology. What I'm also looking at, this is probably what differentiates my approach compared to others. I'm looking also down below the core banking system. If people would see what happens there and how many hundreds and hundreds of systems are just in these 3 layers I'm talking about.
Which layers are those specifically?
Let's imagine what we have in core banking systems. We have transactions, let's say transactions for current account savings and so on. Banking is run on aggregates, yeah? So bankers behind the scenes, which are not the ones known to people, really take decisions daily looking at data in aggregate. But there are various forms of looking at data, and there are many angles. But I would roughly say that you have the financial accounting angle, you have the treasury angle, and you have the risk angle, each of them giving you certain information which indicates how you should act. In order to be able to create these, let's call them visualization, even if it's a lot of logic into them. In order to create these angles, you have to look at the whole population of data for quite a large period of time, 1 year, 2 years, yeah? And you have to ideally see it quite in real time, which is not possible at the moment. Now, our systems, as I was saying, the core banking systems cannot hold data for 1 year, for example. So you have to aggregate. And you have, I don't know, tens and tens of data warehouses which have aggregated the data. While you aggregate, you lose even more attributes and differentiation. But you have to aggregate it for a purpose with a specialism. So you aggregate it for financial accounting, you aggregate it for treasury, you aggregate it for risk. Fine. And only then you apply the logic, which is specific business logic, to these domains. This is a very expensive thing to do. This is extremely expensive thing to do, to maintain, from a number of points of view. One would be that every time when you have a new regulation, which could come from finance, treasury, risk, most banks start almost from the beginning. Oh, what do we need? Let's start a new aggregation. Let's start a new data warehouse. Let's start a new data warehouse view. Let's do, I don't know how many modifications to the middleware. Let's create a new financial system. Let's create a new reporting. It's amazingly expensive. It's unbelievably expensive. There are hundreds of millions which goes every year in every single bank just in this type of things, which are required by the regulators, which need to be done. So there is no way the bank would say, oh, I don't want to do this, or I will postpone it. They need to do them, and they cost a hell of a lot of money.
So you were talking about how most people look at systems that sit above core banking, and your view is unique because you're starting with core banking and looking down, and that's what allows you to kind of uncover some real fundamental challenges and address them in innovative ways that presumably have kind of positive knock-on effects across banks and upwards in system terms.
As I said, the problem is not just the connection to upwards in the digital world. Anybody who would process this transaction will have to deal with the regulation. There is no escape from that. Yeah, so we don't want to repeat the same type of game that happens now in banking. You know, when a new regulation appears, let's start creating almost from point zero. Let's reinvent the wheel and then build the car. We just don't want this. It's so expensive that it kills the digital model. It cannot be sustainable.
In high level terms, conceptually, what would a better core banking architecture look like?
I would like to have the answer now, but I'm just 4 weeks into my research. I do have an idea. Of course, it has to be cloud-based. There is a need to be able to do it also in a hybrid cloud. Two worlds are quite different, not visible to many, but they are quite different. It has to accommodate a diversity of products almost instantaneously. And it has to allow for common source layer for regulatory users, financial accounting, risk, and treasury. which I believe would save so much money from repetitive work. Also, this is in a way a service. It's a processing service. There is intelligence to it, but it's essentially the ability to structure something pretty well and to run it at scale.
And would each bank build their own?
No.
Or is this a third-party vendor that supplies a platform that can support all banks?
I think we will see a number of suppliers in these fields, because I realize that there are others who started recently, and I mean in the past year or two, working on the same idea.
That makes sense from a core banking and down standpoint. What, if anything, does that change in the higher level systems that you referred to before? Or does it effectively make the base more efficient without changing anything that's happening kind of?
You make the base more efficient from 2 points of view. It gives a chance to niche financial propositions to exist. That's the first thing. And then the cost of running financial transactions should go drastically down. And that statement I make for the whole industry. Before financial services, I worked in many other industries. I haven't seen any place where somebody can run with in such an inefficient manner. There is no way in manufacturing that you would see a successful company running without knowing precisely their costs and their profitability by products, by models, by regions, by areas. The fight is on such small margins. In banking, for whatever reasons, to date, we afford to run on very high costs, and I don't think this is the case for long. So we have to come up with models which allow the whole stack to function at lower cost.
How feasible is it for a large incumbent bank to completely renovate their core banking engine?
I don't believe in renovation. I tried for many years, and I've seen others trying. We are talking about architectures which have over 2,000 systems, at least. To cut through in the middle of the bank and to keep it running, it requires a lot of courage and guts and maybe madness. I don't know. It can be done. I'm not saying that it cannot be done, but I don't see who would have these guts and the appetite. I believe that with the budget that a bank runs for, some minor transformation somewhere, you can build the stock on the side and reroute your product and clients slowly through the new architecture, which takes care of the limitations that everybody in the industry knows. We know what is going on. The solution is not to replace the core banking, and I think that everybody who went for software to software replacement, we replace this core banking system with a newer version of core banking system, will not obtain the change desired.
Have you had conversations about this specifically with incumbent banks, and what are their views on the urgency, the relevance, and the feasibility of some of these concepts?
I'm more, at the moment, immersed into problem research and describing the problem and looking at other industries, what happened there, looking at telecom, what happened, looking at areas where complex systems theory has been applied and how. We are entering a time when financial systems, which until recently were considered like complicated systems, become complex. Complex systems behave differently. The new systems should be built differently.
Can you expand on that point a little bit?
So I'm not an expert in complex systems. However, in complex systems, you have systems which function on very basic rules, repetitive rules, very simple rules. And in certain conditions, you could see how, especially at scale, these rules can create strange behaviors or even chaos. The typical systems are ants, bees, cities, how they evolve and how they move, and how cluster form, why high street appears here, or why an industry dies here, and so on. In financial services, in retail, we do have now a problem of volume much bigger than before. And I don't mean that the hardware cannot take it. I mean that we do almost everything digitally now. We have smaller transaction and a much higher volume Everybody can take a payment. I can take a payment. You can take a payment digitally if you want. The technology exists. It's the moment when we have to know what happens in financial services and how individual behaves. And I would argue that it's in times of crisis. In times of crisis, people start clustering in behaviors in various ways. And from a financial institution's point of view, it would be crucially important to understand what is happening and how it's happening in real time. One would argue, why would you care about those moments of crisis? Or for me, it's like saying that a building constructor, why would you care about earthquakes? Yeah, earthquakes could happen every once in 10 years in some countries, but if they happen, it's the difference between life and death. I'm looking at the new systems from this point of view, where it's not just a system, but it's something that has to function in the new conditions without creating more damage because of scale.
What, if anything, should smaller banks or startup banks be thinking in terms of systems architecture in the context of some of the thoughts that you're discussing?
I would go for sharing certain activities and systems and processes. Of course, you can segregate the data. It can be kept securely aside, but they should use some economies of scale for some parts of their architecture. And when they all be hit by various regulatory requirements, it will be something that I'm not sure everybody can afford to recreate that requirement in terms of systems and so on for 10 times if you have 10 challenger banks. It can be done once. Think about it as an algorithm. Data need to be looked at in a certain way in order to allow the regulator to have a market view from that perspective. Yeah. So it's not sharing the results, but it's sharing the way you do it, the cost of implementing that thing. I don't think the industry can carry 10 GDPR implementations and I don't know how many other regulations. It's just money going out of the industry, and I'm not sure for how long we can afford to do this.
One of the points you made before was that with increasing payment volumes, or transaction volumes, it becomes increasingly important to have architecturally sound systems. Presumably, some of the concepts around the Internet of Things and new devices coming online and transacting autonomously could have huge implications on transaction volumes and make some of these changes that you're advocating that much more relevant.
Yes, thank you for making this point. Yes, the world anyway evolves towards micro transaction for whatever you are using or serving.
Are there implications or relationships with things like open banking or PSD2 around the core banking systems, or does that sit elsewhere in the architecture?
No, this is an open system by definition from the beginning, because it needs to be open towards the fintech companies or whoever creates the financial proposition. It could be a bank. So there is no reason why a bank wouldn't say, okay, take this product, run it through, feed it back to me, because there is an input and there is an output from this platform.
How are those interconnections between banks and fintechs in this open model likely to work?
They are the same APIs, or the same APIs. It's the same concept of APIs like in any other bank. It's just that in the current banks, you have to build the API layers. These systems were not conceived at any point to be open in this way. They were machine-to-machine systems. They were data crunching things, and they were 9-to-5 systems. So they were expecting transactions in between these times. This is when people would do banking, and the real banking in them would happen batch-wise afterwards. So it's a completely different way of thinking, technically, how this system would function. So that's why in banking, in the big banks, it's so difficult to build this layer on top, which creates this impression that you are opening up these systems, which cannot be actually open in the way people in the startups expect them to be open.
There was some news out recently, headlines recently, about Anthony Jenkins, the former CEO of Barclays, founding a core banking fintech startup. Yeah. I think it's called 10x Future Technologies or something like that. It would be interesting to understand a bit better what that company is expecting to do.
So I don't know more than what I've read in the press, and which I think you've read too. I don't know how much he would like to run deeper, so from core banking down. That could be one aspect, but not everything. I do buy in the same view, and good for him, because there are many bankers going out of the industry and not coming up with something like that, which to me is like recognition of what it is, calling it what it is. Where do we have the problem? Here. Okay, how do we solve it? Let's try to solve it.
Well, it sounds like you're thinking the same things as some rather big names in banking.
Even if I think we have very different personal experiences of it, he probably was very frustrated to have to take decisions on numbers he couldn't trust. On the other side, I have seen the systems directly, and it's something that you cannot forget. You ask yourself how people sleep at night. I'm glad that somebody shares the same view that needs to be fixed.
You say you wonder how people sleep at night. Why is that? Are there meaningful risks as a result of these system inefficiencies?
It's not my place to make comments on that. Let's say that people assume that there is much higher automation in the data processing than it is in reality. Just try to picture 2,000 systems and imagine how data flows through them. Somebody would say, but what's so difficult? You have some transactions which happen anyway somewhere else in another network or payment network and so on. What do you do with 2,000 systems? Yeah, what do you do? If something breaks, if something doesn't work, something trivial doesn't work, it depends where it is in this picture. It could paralyze a lot of things. Luckily, all banks have a small group of people who understand things pretty well and can act very fast when things happen. But that's not sustainable.
In the past few years, we've seen some IT failures at major banks in the UK, which have prevented depositors from accessing money at times. Are those issues, some of those issues, related to these specific systems that you're talking about?
When I've seen failures, they were not because of technology, but rather because of people and governance structures and lack of ownership or responsibility. The usual things that lead to project failure. It's not the complexity which involves a certain adaptability and adjustment. Things are too complicated for people to comprehend easily, and then they focus on very narrow things, and you cannot solve the problem. Yes, I have seen many failures, and it is very painful. Yes, I think all of us in UK have invested ourselves in the banking system, if we want it or not. Our government enrolled us in this. So it's very painful when you see big failures.
You mentioned how different system architectures could enable richer data collection. What would that richer data enable banks to then do?
Let's take two very basic propositions which exist in 100 forms in the fintech market. One is notifying a customer about important things happening to his account, like tomorrow you have a direct debit for 200 and you have 100 pounds in your account, move this money, blah, blah, blah. This thing. These things sound very basic, but actually if you do not have that place where you analyze the data and you look at the dates and come up with this sort of insight that you serve to the customer, you just cannot do it. That one thing. If you cannot identify the direct debits, if you cannot identify when he's paid, if you cannot hold enough data to figure out that the pattern of behavior or spending has changed. There are many things. People think just do notifications, but you have to notify about something. And to notify about that something, you have to analyze, interpret, and so on. Another proposition, like I have seen many, PFM, personal finance management, allowing you to categorize your expenses and or even more to save towards objectives and so on. These are not simply UX propositions. All that categorization in various forms, which could be different for every individual, comes from what attribute you have on transaction. You cannot categorize transaction if all what you have is a date and an amount. You need something more there. You must have the ability to hold whatever is relevant for a type of categorization. And this doesn't exist. That's why the models that were implemented were so poor, and they didn't catch up. Not because people don't want to understand how they spend their money or make a budget or save.
So both of those cases are things that banks currently have difficulty implementing due to system shortcomings that wouldn't necessarily exist in a next generation iteration of system architecture.
Yeah, in the next generation, this is like, it comes out of the data. You don't have to cobble it together.
Andra, what's the best way for people to connect with you and find out more about your work?
The best way for me is Twitter. I use Twitter a lot to read, get in contact with people, and I've met some amazing people on Twitter, some of whom have become my professional advisors or friends.
And it's at Andra Sonea?
Yes, at Andra Sonea.
Well, Andra, thank you very much for your time today.
Thank you too. Thank you very much for having me.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.